Blair, for those who may not be familiar with your firm, who exactly is GoalVest?
Yeah, so GoalVest is a New York City-based RIA founded by our CEO, Sevesty, about a decade ago. We manage money for clients both across stocks, bonds, and a lot of alternative investments. And a few years back, we wanted to give our clients more access to private markets, getting access to those high growth companies that you can't access in the public world. So we started with our first fund just with our own clients. We had great success with that, have had great performance. And so we wanted to expand that. And so now not only do we have Fund 2 for our own clients, but we have it for other firms as well so they can get that same kind of access that we're getting.
So the first fund turned out extremely successfully. Now you're on your second fund. And these are venture funds. I thought venture investing was dead or at least struggling. Has the recent move in IPOs really accelerated the interest again?
Yeah, exactly. Yeah, we just did our first close in our second fund, had a lot of investor interest. And I think it's based on two things that you just touched on, right? So one is our performance. Our first fund has been top decile performance. We had a recent exit in CoreWeave, which returned over 5x for our investors in less than 2 years. So phenomenal success there. But yeah, the other aspect is on the market side of things, right? You've had IPOs like Figma, CoreWeave, Circle, all popping huge on the first day. We have Klarna coming out tomorrow. So, I think there's been great excitement and people want access before it pops 100% on the first day, right? They want to be invested for several years before. And so that's the kind of access that we're going for. And that's the kind of excitement we're seeing.
How can you be so confident that you can repeat the magic that you got with CoreWeave? Talk about your process.
Yeah, for sure. It's a great question. I really think with our performance in our first fund, it's really validated our strategy, right? We tried to reinvent the venture model a little bit, more focus on fundamentals, more focus on profitability, those things that these public market investors are looking for when these companies come to market. And so I think that's been a key part of our strategy and it's been working. And I don't think that's something that's going to break going forward. And I think we're going to double down on our second fund here, do it at a larger scale and for more investors.
Is your fund similar to hedge funds, VC funds? How is it the same or how is it different? Because the big questions right now when it comes to private market investing is the same ones, actually. It's liquidity and cost, perhaps.
Yeah, no, it's a great question. I kind of alluded to it earlier, reinventing that venture model. My experience as an equity analyst, I brought a lot of that to how we built this fund. And so really it starts, rebuilding it from each stage, from the sourcing, accessing both traditional primary venture rounds, as well as incorporating the newly created secondary market that's allowed for a lot of liquidity for investors, being more focused on the diligence on profitability and fundamentals and true underwriting of these businesses, as well as the portfolio construction that we put forward, where we're a bit more diversified than most traditional venture funds that may be focused on one or two verticals, where we have both tech and things like defense and consumer products, right? So a bit more well-rounded. And then giving the LPs what they asked for, you alluded to liquidity, right? So quicker fund cycles, lower fees, lower minimums, more co-investments. So we're really listening to what the LPs wanted and delivering that.
And then finally, you had a big home run in Fund 1 with CoreWeave. So what are you watching in Fund 2? Any standouts that we should keep our eyes on?
Yeah, well, I think it's, we think about it more from a top-down perspective than a bottom-up, right? And I think, like I said, we're pretty diversified from a sector perspective. Two things that we're focusing on specifically, I think, in the first fund, we did a lot within AI infrastructure. You alluded to CoreWeave. Also, things like Lambda and Armada have played out well for us. I think it's that shifting to the application layer as AI kind of matures, focusing on vertical winners like Harvey and legal or a bridge in medical, right? So I think we'll be more active in AI as well. And then secondly, I think it'll be more on the defense side of things, right? So if you look at the last several decades within defense, it's been dominated by these 5 key players that have really locked up innovation. And so I think now with Palantir and Anduril breaking through, you're starting to see more of these innovative startups and more willingness from the governments to award them contracts. So I think that's going to be a key area where we're seeing a ton of deal flow.
All right, well, thanks for coming on and talking about it.
Yeah, appreciate it, Greg. Thanks so much.